What expenses can I deduct in my business? This has to by far be the most frequent question that I have answered over the years in my practice. And I'm going to give you two words that the IRS looks at to see whether or not you can deduct any expenses you're putting through your business, and also some things that are never allowed, and some things that are limited, just so you know what to not even bother putting on your books at the end of the year. If this is helpful information, make sure you subscribe to the channel so you get notified next time I upload a video. And if you happen to see me get spooked while I'm recording this, it's just because I saw some beady little eyes around here, and I'm just trying to steer clear of any gators that might be hanging in the mangroves. So before I tell you exactly which expenses you can deduct, let me challenge you to ask that question once a year, or at the most 3 or 4 times a year when you are doing tax planning and looking at estimates. But don't fall into the trap that a lot of people do in letting the IRS control your business. And by that, I mean the IRS is constantly chirping in your ear, and you're wondering what is allowed, what isn't allowed, what you can deduct, what you can't deduct. Instead of worrying about the IRS, think of the return on investment, the ROI on any money you spend in your business. That is what profitable and successful businesses do. Spend money that makes you money in your business, and then at the end of the year, once you've made money, you will have a tax problem that you need to worry about, and then you can go through carefully with your accountant and decide what you can deduct and what you can't. And there may be some decisions in there to make, such as depreciation and stuff that you can speed up or slow down. But always spend money to make money in your business, and then you can have a tax problem to solve at the end of the year. As far as the IRS is concerned, you can deduct things that fit two definitions in your business. Are the expenses reasonable are the expenses ordinary, and are they necessary? So ordinary expenses are usual expenses, those that people in your industry have on a regular basis. So if you're a hairdresser, that would be your shampoo, your hair dryers, your salon chairs. If you're a travel agent, you are going to have travel as an ordinary course of your business, whereas a hairdresser may not. So that's two different examples where one business could have one type of expense that the IRS would allow, and another one would have a very limited expense. The other is that it's necessary to run your business. This does not mean that your business can't run without it. So the IRS isn't going to look and say, oh, well, you didn't need that to run your business. You could have run it without it. That's not what they mean by necessary. They just mean, you need to turn on the lights, or you needed to do some advertising to bring in more customers. So could you run a business without advertising? Absolutely. A lot of people do. Is your business going to grow without advertising? Probably not. So it does become a necessary expense in your business. With that being said, once you have those two things in mind, the ordinary and necessary, and I will put the exact IRS definitions down in the comments so you know exactly how the IRS defines those, but those are the pretty watered down versions of their definition. And some things that are very common in businesses to deduct are rent, utilities, office supplies, salaries and wages of your employees, any benefits that you provide to employees, most of those are fully deductible. Travel, if it's business related travel. Now be careful with travel, because this is where a lot of people try to get a little bit tricky and can get in trouble with the IRS. Travel, make sure that it is necessary. So if you're going to a conference for continuing education or to increase your skills in the business, then absolutely that would be a necessary expense, and you can deduct that. If you're trying to get a little bit tricky and you're trying to write off that Disney vacation cruise, and there happens to be some continuing ed while you're on board, then you can deduct part of that, but you cannot deduct the whole thing. So the other word that I used earlier was reasonable. Be reasonable in your expenses. Cell phone is another thing. Those are absolutely necessary anymore, but is the IRS going to let you write off the whole family plan? No. Is the IRS going to let you write off your whole personal plan? Also no. So if you are the only one on your cell phone plan, then maybe write off half of the bill every month. The IRS knows that you're also using it, unless you have two lines, the IRS knows that you're using it for personal expenses too. So don't try to, just try to write off all your home expenses, no matter what the internet tells you. Another thing that's limited is your auto expenses. There's some cool fish I'll try to show you guys that just went by. I'm just keeping my eyes out for things hiding in the mangroves. Another thing is your auto. 90% of my small business clients should just be writing off mileage. The IRS wants to know mileage anyway. But even if you have a vehicle that is used more than 50% in the business, meaning you're doing a lot of traveling to clients, you're doing a lot of traveling out of town, the IRS still wants to see your mileage. They want to see the mileage at the beginning of the year, the mileage at the end of the year. They want to see how much was business mileage, how much was personal, so that even if you're depreciating it, that will help you prorate the amount of depreciation you can take on the car. Your other expenses, it can help you prorate your fuel, your repairs, your insurance. Otherwise, you also want to know your mileage so you can determine, is it better to take the mileage expense or is it better to take actual expenses? You can go back and forth between those every year, but only if you keep track of your mileage, so you can prove to the IRS how much was business and how much was personal. One of the things that is not deductible is entertainment. And here's what I mean by spending if there's return on investment. As of the 2018 tax year, this changed in 2017 going into 2018, you can no longer deduct entertainment in your business. So if you're taking a client to a baseball game or to the theater or something to try to build a relationship or trying to schmooze them a little bit, that's absolutely allowed. It's just not deductible. So here's where I would, if I had a client coming on board and I was going to take them to a ball game to try to spend the evening with them, to try to get to know them better, to try to answer questions about my business, would I spend that knowing that the IRS isn't going to let me deduct it? 100 times yes. Spend that money, because I could spend $500 on that evening, and if I get a $5,000 client, that could be $5,000 a year for the next 10, 20 years in my business. So was it worth it to spend the $500 even though I didn't get to deduct it and save $250? 1,000%. So don't let the IRS control your decisions so much that you're not spending money that's going to make you money in the end. Meals are deductible, but only 50% of them. So a lot of people sneak meals into their expenses that the IRS will never allow, and those cause you many more problems than they save taxes. So if you're not away from home, don't even bother to use the business credit card or debit card to pay for your McDonald's or to pay for your Starbucks or to pay just because you're using at Panera and you wanted to get out of the office. If you're not away from home, just go buy yourself lunch, enjoy the afternoon, run your errands, but don't try to put that in the business because the IRS won't allow it. And besides that, if you spend 20 bucks on lunch, you only get to deduct $10 of it. And if you're in the 20% tax bracket, you're saving $2 in tax. So was that $2 even worth putting into your QuickBooks? Was it worth having your accountant ask questions about or reconcile? Absolutely not. And it also will just encourage the IRS to ask a lot more questions if they're reviewing your books, and it will make them wonder what else you're hiding in there. Are you hiding family vacations? Are you writing off car expenses that you shouldn't be writing off? That sort of thing. So just keep your books clean and don't put things in there that you shouldn't be and that aren't helping the business. So I always say with meals, are the meals feeding the business? If the meals are simply feeding you because you're out running errands or you're running from one client to a next and you're bopping around town, that's feeding you, but it's not really feeding the business. It's not bringing in more revenue. The business isn't growing from that meal. If you are taking a client out to lunch, or you're taking employees out to lunch and having their annual review or doing some kind of planning meeting with them, then that is a legitimate business expense. Just make sure that you keep that receipt and you note who you met with and what you discussed, so that if things are reviewed later, you have those documentation that, yeah, you're not just writing off Starbucks. I've seen over the years many times where on a morning basis, I'm seeing people put coffee in their QuickBooks, and your coffee run on the way to work isn't deductible any more than your mileage on the way to work is deductible. That's just getting you to your place of business. That's maybe your wake up call in the morning, but it's not a legitimate business expense. So look at your expenses carefully. If you have subscriptions in there, that's another thing that is deductible. So if you have Google or OneDrive expenses, any software that you have in your practice, make sure you're writing that off and you're getting deductions for that. Advertising, make sure you're getting all your Google advertising, YouTube advertising, travel, hotels. Airline tickets are deductible. Tolls, if you're on the road, if you're driving out of town and you're paying tolls to go to a client or to go to a conference, all of that. Again, make sure you keep a mileage if you're doing that sort of thing. You can write off parking if it's for a business trip. So yeah, anything to do with travel, make sure you're keeping all that. And then if you're unsure, ask your accountant, but just be reasonable about it. Don't arm wrestle your accountant too much. You could spend more time trying to get a silly deduction that isn't going to help you in the long run anyway. So remember the 3 words: ordinary, necessary, and reasonable. Track everything. Keep mileage logs, keep receipts, keep credit card and bank statements. Don't pay for cash with anything. I mean, it's a cashless world anyway. So stop with the cash. Don't take out 50 bucks or 100 bucks when you go on a business trip and then start paying for things at the airport with the cash, because you're going to lose that receipt. And then the IRS, if they see cash coming out, that's just a distribution. Unless you have a receipt to prove what you paid for with that cash, the IRS isn't going to let you deduct the 50 bucks that you took out at the airport. So just keep a paper trail. Use a debit card, use a credit card, use accounting systems so you make sure you're not missing out on things and everything's reconciled. And again, spend money to make money. That's the best way to grow your business, because at the end of the day, you want to have a tax problem to resolve with your accountant, and that's the easiest way to do it. And then go through your books and determine what you spent, what can be deducted, and if there are other ways outside of your expenses that you can save taxes at the end of the year. Thank you for joining me on this leg of the journey. I did not get attacked by any alligators or even get spooked by any, which is great. And tune in next time. I'm not sure where the next video will pop up, but I'll try to keep it interesting, and I will see you on the next leg of the small business journey.